Welcome to Money Talks. I'm Genevieve Westcott with what's up in the rural economy and around the world. In this edition, global food prices continue to rise and rise, and people are taking to the streets and bringing down regimes. The Middle East and North Africa leading the way. How do we ride the tiger that's changing the world? If you're a dairy farmer, get ready to party. Fonterra announces a record payout forecast. Can it go any higher with those global dairy prices? And Christchurch in crisis. A killer quake rocks the South Island and the New Zealand economy, still battling to make sense out of September's devastation. How much worse can it get? What's the ripple effect on the recession? The human and the economic toll. New Zealand's darkest day for the city and the country. All this and much, much more coming up. Joining us now is ASB rural economist James Shortall. And of course, all eyes are on the Middle East, with Libya and Bahrain on the boil as people there rise up against their repression. And global equities, James, are way down.
Yeah, well, I mean, there's plenty of activity happening in the global marketplace, but it's pretty hard to concentrate on what's happening in the market and what's happening with the global economy when we've got such devastation happening here in New Zealand and the human toll, people still trapped in buildings and trying to be rescued. It's it's pretty sobering thought for everyone, I think. Okay,
let's talk about Libya initially. They produce what, 1.6 million barrels of oil a day. Surely that's got to be on the world's mind.
Well, yeah, I mean the what's happening around the world and the I guess the political turmoil that's happening is a major issue for markets at the moment. Libya is the third largest producer of oil in Africa, but actually has the largest reserves of Africa. So it's pretty important in terms of the world market. They're starting to take people out of their some of the oil companies are starting to take people out. They're closing down some of their production facilities, so that could have an impact on supply. We've already seen oil prices spike up to around $108 per barrel. This is quite significant, and it could choke off any fragile economic recovery that we are seeing around the world right now.
And gold prices, of course, hitting now what, US 1,400. That's a lot of dough. People are feeling very shaken.
Well, that's right. I mean, generally when investors are cautious, they go to the safe haven assets.
Absolutely.
We see them go back to the US dollar, go back to gold, and that's what we have seen. I mean, gold's at very, very high levels at the moment, and we're probably going to see that for a little while yet.
And by contrast, and ironically, the U.S. Fed now seems pretty optimistic about turning the U.S. of A around. What indicators are there?
Well, I mean, you're starting to see some retail sales start to pick up a little bit. Consumers might be starting to feel a little bit better about themselves. The Fed last week, they released their minutes, which was quite important for the global economy and what they're actually thinking. They said the US economy is looking quite good, but we're still not well yet. So I think that's quite an important point to note, that they're feeling more positive, but there's still a way to go yet. They may start increasing their interest rates later on this year. The impact for us here in New Zealand might be that the differential between our interest rate and theirs would narrow, which might be positive for the New Zealand dollar, where we might track down a little bit.
Yeah, we might come back against it, but are we going to hit 80 cents? I know Derek Rankin, our foreign exchange expert, late last year was predicting that we would see 80 cents this year. What do you think?
I don't think we're going to hit 80 cents.
Anywhere close?
I mean, I think with what's going on at the moment, with the tensions around the world, the uncertainty, that's going to drive people back to the US dollar. That's going to mean that we might be a little bit weaker. And the fact that with the earthquake that we've seen over the past few days, and that's going to limit the New Zealand dollar already. Yeah,
we'll talk about that in part two. Meantime, elsewhere in the world, in China, they've got some interesting tricks up their sleeve. What's going on there?
Yeah, well, food prices. All the talk around the world at the moment is about food prices and the amount of people that are going into poverty. The World Bank's concerned about it. Political leaders are concerned about it. The Chinese are concerned about their inflationary pressures. Of course, food makes up a big part of their increases in prices. Now, they are talking about some policy changes along with some other Asian countries. These might include reduction in tariffs and import duties, that sort of thing, to try and restrict the increases in the price of food and make it a little bit easier. So, that might have some positive benefits benefits for us in New Zealand in terms of lowering import duties, but it's never really that good to see governments sort of imposing their own policies on developed markets and things like that. So there are some concerns around that.
And positive also when they get out of bed every morning, the sheep and beef farmers of New Zealand. Beef and Lamb has now come out with its mid-season report, and it's looking very, very good.
Yeah, I mean, things have changed quite dramatically in the last 6 months. I mean, the US sector, of course, in a similar position. They're driven by corn prices, and that's limiting supply in the US market at the moment. So some of the factors that are happening there, we've got a beef herd that's down to a low of the last 53 years. We've got a low US dollar, which is basically promoting US processors to send their beef offshore, so their exports are going through the roof. At the same time, importers are really attracted to the US market because they get lower returns. So there's some really positive fundamentals there that I think are going to continue right through this year and perhaps into next year also.
And when it comes to lambs, we're going to be exporting about 8% less than last year, but we're still going to make the same money.
Yeah, I mean,
that's got to be good.
The prices are just skyrocketing in the UK market. There are reports coming out of the UK that consumers are really pulling back on the amount of lamb that they're consuming. So there's a concern there, but I think that really the underlying factors there are going to be all about supply, and Australian supply is back, New Zealand supply is back. That's going to continue.
Okay, coming up after the break, thank you, James, we'll be talking to Ian Proudfoot, head of Agribusiness for KPMG. He puts our rural players under the spotlight, and he takes no prisoners. The Chinese businessman keen to snap up more of one of our rural service companies move one step closer to doing the deal. And here at home, milk prices get the big freeze as Fonterra gives New Zealanders a break. Is it good business, a PR ploy, or pressure from the people, the press, and the politicians? And does it set a precedent? But first, with Beef and Lamb New Zealand now predicting the highest farm profit since 2005 and up 11% on last year, answer this in our Farmers Facts and Figures quiz. According to Beef and Lamb, what's the average profit per farm expected for 2010-11? The answer when we come back. Stay tuned. Welcome back to Money Talks. Just before the break, we asked you, according to Beef and Lamb New Zealand, what's the average profit per farm expected for 2010-11? The answer? $67,600, up 11% on last year. Joining us now is head of Agribusiness for KPMG, Ian Proudfoot. And kicking off, we delve into Fonterra's amazing announcement of an increase in a record forecast payout by 60 cents to up to $8. That could mean a multi-million-dollar shot in the arm for the economy. Ian, that's got to be terrific news for the dairy sector.
Well, it's definitely good news for the sector, and it's good news for those farmers that are still battling through high debt levels and trying to get their businesses back on a balanced keel after the last few seasons. So how much of that money we'll actually see flow into the New Zealand economy, I'm not sure, but hopefully we see some debt being retired and businesses being capitalised more appropriately to look forward for the future.
Yeah, it sounds like a lot of money, but the reality is there's a lot of debt repayment. I mean, I think the banks, James, are the ones that are going to cash in on this.
Yeah, I think there's going to be a lot of repayment of debt. Farmers had a big shake-up over the past few years, and really I think that's going to continue the next 2 years. But when you're looking at the average increase for sheep and beef farmers, and they've got a $67,000 profit. That's basically the increase that for dairy farmers got yesterday, 60 cents on an average dairy farm of 100 to 110,000 milk solids, and they got that in the back pocket just yesterday. So that's the relative fortunes of the two industries. Dairy's probably coming out on top right now. And
of course, the other thing I'm sure that is worrying farmers, even dairy farmers, the rising costs of fuel and fertilizer around the world. Ian.
Well, that's clearly putting strain on businesses. So these increasing payout just helps to cover those costs. And James talked earlier about the fuel costs in the first part of the programme, and that is a big challenge for a lot of agricultural businesses at the moment. That drives a huge amount of cost, and if we can see businesses actually getting a bit more return from the higher commodity prices, and that helps balance the books. And there's a lot of people that haven't balanced books in recent years, so it's looking good. But I don't think it's time to be rushing out and buying new tractors.
Yeah. And how much longer, gentlemen, do you think the rise in the price of milk on the world market can continue to rocket up?
I mean, I personally think that commodity prices, the underlying fundamentals are looking really good for dairy, particularly at the moment. You know, we've seen production quite low, and you know, still demand out of China, specifically China, is looking really good. The more we see high oil prices, then you know that means that there's a positive wealth factor coming in from the Middle East. That's going to be good for demand. So I think there's some really good underlying factors coming through at the moment, which is good for dairy.
I think both the demand profile looks good and the supply profile is geared towards New Zealand's benefit as well, because as James has mentioned in the first part, corn is so expensive for people that are using corn-fed production systems are finding it really hard to make money. So you look at the future, it looks really positive. And Fonterra have been doing the right things in terms of looking at the value-add strategy and working out how to make more out of every kilo of milk solids they receive, and that's flowing through now. It's taken a number of seasons to get to that point, but the benefits are starting to crystallise.
And they say for every 10 cents on the forecast payout, that's worth something like, what, 150 million bucks to the New Zealand economy? And gentlemen, it couldn't come at a better time. I'm talking, of course, about the quake. Your reactions, James, when you heard about it yesterday?
Oh, I was just completely gobsmacked, to be honest. I mean, initially we've heard so many quakes that have come out of Christchurch that at first you don't really know whether it's a major or it's a minor earthquake, but when you start to see some of the pictures that are coming out, you realise how major it is.
Ian, I know it is very early days, but this is just a kick in the guts to the New Zealand economy, isn't it? I mean, how are we ever going to recover? I mean, we've already pumped, what, $4 billion into the reconstruction from the September quake?
Well, it's devastating, and you know, some of the stories this morning that were coming from the radio, you know, with a young child that moved me to tears. It really was quite difficult to cope with those sort of things. And I don't have any. I'm from Britain. I don't have relatives in Christchurch, but you know, the primary focus for me is confirming that people in our business in Christchurch are fine, and thankfully they all seem to have come through okay. But when you look at the economic issues, John Key says it's too early to be talking about those. I really think it is too early. There's the human tragedy going on out there at the moment, and we've got
absolutely
that's got to be the key priority. And
people first, people first. The rest.
Those of us in the rest of the country have just got to be thinking about how we can help, because you know, we're a small country. We've got to pull together if we are going to see our economy recover out of this.
Yeah, I mean, like during my research, which I sort of do each morning as to what's happened on markets overnight, then it's been big news around the world too. Bloomberg, one of the major news providers for financial markets, Wall Street Journal, this is all major news. The earthquake here in Christchurch, and you know, the immediate economic impacts were really the currency dropping a cent effectively immediately, dropping almost 1.5 to 2 cents,
which is phenomenal. I mean, it just flashed around the world like wildfire. And
this comes on a day when Fonterra, our largest company, our largest exporter, big driver for our economy, announces a record payout.
A huge stimulus into the economy.
Yeah, I mean, this is like these are the factors that are going on. So, you know, the currency dropped down to 74.5 yesterday. It's bumped back up a little bit again now. But the other impact is interest rates. We've seen interest rates pull back, and you know, these are all effects that you know, really the economy is going to go through a real slow patch here.
Yeah. And you look at the resources that we're going to need to rebuild Christchurch now. They were significant after the September quake. They're now absolutely immense, and we've still got a situation in Brisbane and up on the north of tropical Queensland where they've had 2 major disasters in the last month as well. It's unbelievable that this part of the world has taken 4 major natural disasters in 6 months.
We are such a tiny country and a tiny economy, and you know, the recession is still here. We're stuttering along. Realistically, how bad could it be for the taxpayers?
Oh, I think it could be quite significant. You know, depending on what the government provides. I mean, I think they're going to do whatever they can right now and whatever is required to get through this. But I think the effects are going to be quite long term. This is not planned. You know, we may see some rating agencies. They're going to start sorting through this over the next few days. And until we really get some estimates, then it's going to be difficult for them. But it could have some longer term impacts on New Zealand government finances, but also on their economy.
Sadly,
I think there's other issues you need to think about. You know, the insurers that we've got in Australasia have taken huge hits, and they're going to be having to rely on reinsurers to pay out. And the reinsurers having 4 events like this so close together, we've got to start asking questions now whether they'll actually have the ability to make the payments required to put the money into the economy. And I think that's probably going to be, and as this rolls out, one of the big issues. Will the money actually be there in the pockets of the people that take the reinsurance contracts?
And their longer-term appetite for insurance in parts of New Zealand, considering the events that have happened, what impacts that might have down the track.
And probably at some point there's going to need to be a serious discussion with a lot of businesses about, do they stay in Christchurch?
Well, that's the whole thing. Are we going to see a mass exodus of people now trying to get out of that city, moving to the North Island, for example?
Yeah, I mean, and reading and listening to the news, then this is perceived to be a separate earthquake event. So people of Christchurch are going to have to endure all the emotional destruction and things that they've had over the past 6 months all over again when they go through the shocks, that sequence of shocks over the next 6 months or more. There's a lot of families that are going to be hurting right through that. Whether they move is a key question, but it could have long-term impacts on that part of New Zealand.
All right, well, not good news here at home, and sadly not good news around the globe either, talking about global food prices. I know this is an issue very near and dear to your heart. Ian, let's talk about that.
Yes, the pressure on food prices is causing regime change. We've seen it in Egypt, we've seen it in some other countries already, and we've seen the pressure that's come on in Libya that you talked about earlier. The governments are going to start doing things that are not rational, because that's the only way they're going to be able to protect their positions. And as soon as you start getting those sort of distortions in markets, what's going to happen long term becomes a real open question. So, we've already started to see our government ask some questions you wouldn't expect the New Zealand government to be asking around the price of milk in the last week. Correct,
yeah, and let's talk about that. Was that Fonterra just lashing out to stem, if you like, what the people were criticizing them for? Was it a PR gesture? Was it good business sense? What do you think?
I think it was a good business move.
You do? Why?
I think that Fonterra recognised the importance of New Zealand being seen as a strong dairy consuming country, and the importance of enabling people to consume dairy as part of the brand of New Zealand. And I think by fixing prices, they're helping to try and preserve that domestic sales market. It's a relatively small part of their total business, but it is important that they can say, look at New Zealand, we're a healthy, fit, vibrant country, and part of that is because we consume dairy products here.
James, what do you think? Do you think the government leaned on them a little bit behind the scenes?
I don't know if the government's. I've got the feeling that there might have been some leaning going on pretty soon, but I agree with Ian's point that it's a good business decision. Fonterra and dairy farmers in the dairy industry in New Zealand needs to have the support of the New Zealand public, and we have sort of been as an agricultural industry. There's been some environmental pressures. There's been things in the paper. All of those seem to come to the forefront, and now all of a sudden, high price of milk in the supermarkets, people start to get a bit negative about dairy farming and whether dairy farmers are really taking the mickey with this. So it's a small part of Fonterra's overall business. They've got people on side. I think it's going to work out.
But then we go to the supermarket, and what I can't figure out is how come it's going to cost me more to buy milk here in New Zealand than if I'm visiting the UK or Australia. Ian?
Well, I suppose that's a mixture of, we've got a relatively duopolistic retail sector, so the level of competition around certain prices drives what prices we actually pay at the supermarket. We've got GST on milk, and Australia and the UK don't have GST on that, or VAT on that product. So there's a whole heap of other factors I think come into the price we actually pay. But there does need to be an educational process with New Zealand consumers in total, that food prices aren't necessarily, just because we produce a lot of food doesn't mean that our pricing should be lower than the rest of the world. We're selling products that we have to sell on commodity markets, and our producers have a choice to sell domestically or sell internationally, and therefore our consumers have got to understand that if commodity prices go up, as they have done in the last 6 months, our prices are going to reflect those movements in commodity prices to some extent.
I was interested to read that in China now they're calling it the Jasmine movement, perhaps, that we're going to see people rising up in the streets there as well against the government. What do you hear on the grapevine?
I haven't heard anything along those lines. I think the Chinese government, when you look at the China Daily, which is one of the places I look most days these days, are very aware of some of the pressures around food prices and are putting out a lot of positive messages to the people about the steps they're taking. It seems to be corn is more the key issue in the Chinese market, and there's a view there's a large drought looming in northern China, which could well make them a significant corn importer. And if they come into the corn market, then that could have quite significant impacts on the price moving forward.
Thanks, gentlemen. Coming up after the break, future proof. What our experts will be watching, analyzing, and assessing in the next 7 days. Buckle up for the ride and find out where they're headed. But first, a question for you in our Farmers Facts and Figures quiz. Just how good was the latest net profit after tax for dairy genetics operator Livestock Improvement Corporation, thanks to recovering confidence by New Zealand dairy farmers? The answer when we come back. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, just how good was the latest net profit after tax for dairy genetics operator LIC, thanks to recovering confidence by New Zealand dairy farmers? The answer? LIC's net profit after tax surged to $24.9 million, up 25% from a year earlier. The strong result comes as world commodity prices boom and confidence within the dairy industry continues to rally. And now it's time for Future Proof, what's coming up that our experts will be watching. James, of course, the PGG Wrightson situation. It seems that the mystery bidder, the big Canadian consortium, Agrium, is out. They didn't like what they saw. And the Chinese people may be snapping up more of the company.
Yeah, I mean, if it was Agrium, let's just say it was Agrium, but the speculation from the last few weeks, of course, someone else is going to enter the market. They pulled the pin. They, for whatever reason, PGG Wrightson's announced earlier on this week, they're not going to enter into any more bids. So now it's really relieved the market tensions for Agria, who have got to take over off from the market. So, you know, we'll wait and see whether that goes through.
Any concerns for you, Ian, looking forward to that company, PGG Wrightson, with Agria? It's got, what, a 19% stake at the moment, taking more of that?
I think the New Zealand industry and investors in New Zealand need to think very carefully about that seeds business, because I think that's the jewel in the crown in the Wrightsons' portfolio, and it's a critical business to New Zealand's IP in the agricultural sector. So
when you say think carefully, what are you really saying?
I think they need to think whether we really want to be selling that asset overseas.
What do you think, James?
I would agree.
Okay.
Short and sharp.
Yeah, short and sharp. Okay, to the point. Meanwhile, more Chinese interest in our wool scourers business, and Cavaliers trying to head them off at the pass. What's the latest?
Yeah, well, Cavaliers looking at they're going in with the private equity, or two private equity companies, effectively the accident compensation, and with direct capital to buy up the remaining shares in Wool Services International. There's potential that may be bought by an offshore party. They've gone to the Commerce Commission because effectively, if they were to buy it up, then they would hold the whole wool scouring operation in New Zealand. So there's it's going to be an interesting situation that I'm going to be watching that one quite closely, to be honest, because we're either going to be potentially selling it offshore to Chinese interests, which you know, we've mentioned that's going to be quite key, and then the other option is going to be a monopoly here in New Zealand. So one to watch.
Yeah, I think the cost differential in scouring in New Zealand versus scouring in China means that if assets probably not New Zealand controlled, we won't see much scouring being done in New Zealand.
Okay, so that is a must-watch situation. What else are you eyeing up in the next 7 days? Of course, probably the quake weighing huge on most people's minds.
Yeah, I mean, primarily the quake, I think, what's going to be coming out of that, and the human toll, I guess, out of that, whether people are going to be recovered. The other impacts that are kind of come out of the quake are, you know, the Reserve Bank. We've seen interest rates drop over the past day. Potentially, we've pushed out our forecast for official cash rate increases, but now there's actually we've built into our forecast that there's potentially going to be a drop in the official cash rate just because the New Zealand economy is going through such a soft patch. You know, we could see the Reserve Bank come into the market, which is very unusual, but they could come in any of the next week to 2 weeks, 9 o'clock in the morning, announcing a drop in the official cash rate. So that's something that we're going to be watching really closely.
Okay, gentlemen, thank you so much, and I'm sure we'll see you back here soon. Thanks to my guests, ASB rural economist James Shortall and head of agribusiness for KPMG, Ian Proudfoot. We love to hear your feedback, so drop me a line on the website. And our thoughts go out to the people of Christchurch. As the search for survivors continues, we could well be witnessing New Zealand's darkest day.
the building. That's how it works.
Trembling, and the rocks are falling down in Sumner, just outside Christchurch.
Keep the faith in these difficult and dark hours, and keep praying for little miracles. See you next time.